So apparently 1 in 2 people who own crypto don't actually understand the tax implications of it. If you're watching this right now, there's a 50% chance that you don't know it either. Whenever you purchase crypto, that is considered an asset for capital gains tax purposes. Let's say you purchase some Bitcoin. That Bitcoin is an asset, so the capital gains tax rules apply. The price that you paid to purchase that Bitcoin is your cost base. Now, let's say you decide to sell that Bitcoin in the future. Whatever you sell it for, the price that you sell it for, the difference between that and the cost base is essentially your profit. So then that profit is your gain for capital gains tax. But you also need to understand that there's such thing as short-term gains and long-term gains. And a short-term gain is when you've held that Bitcoin for less than 12 months, but a long-term gain is when you've held it for 12 months or more. The difference between these two has significant tax implications. If you have a short-term gain, that means that you don't get access to the 50% capital gains tax discount, which effectively means that you're going to end up paying more tax. But if you have a long-term gain, that means that you do get access to the 50% CGT discount, which means that you effectively half the tax that you're going to pay. Let's say that instead of making a gain, you made a loss on your Bitcoin investment. What that means is that loss is considered a capital loss, so it cannot be used to reduce your other taxable income. Instead, that capital loss is set aside and can be carried forward. If you have any capital gains in the future, you can utilize those capital losses to reduce those future capital gains. Basically, you can't claim that loss as a tax deduction. And there's also a few different types of transactions that would trigger a capital gains tax event. Firstly, if you simply sold the Bitcoin and exchanged that for Australian dollars, well then that is a taxable event. If you sell the Bitcoin to purchase another crypto, for example Ethereum, well then that is also a taxable event. If you gift the crypto to a family member for no consideration, that is also a taxable event. And also staking rewards and airdrops are also considered taxable income and should be included in your tax return. But the good news is if you're just holding on to that crypto and just waiting for the value to increase and just watching the value change, well then there is no immediate capital gains tax implications to that. Hopefully now 100% of you know the tax implications of crypto. You're welcome.